We are dedicated here to making key management something that you get excited about. So first of all, Mike Dudas, CEO of The Block. It's a digital asset news and information site. And I have a little secret to share. I actually kept all of my cryptocurrency in an exchange vault until 6 months ago, when the rest of my team convinced me that I was crazy. This group will tell you why I was crazy over the next 30 minutes. And super excited to be with just an incredible group, and we'll just go down the line so they can each introduce themselves.
Yeah, hi there. I'm Benjamin Soong. I represent Ledger out here in Asia Pacific. Hope most people know about Ledger. I want to thank everybody for your support with our hardware wallets, the Nano S and Nano X. But just to give a little more background about Ledger, we're more than just a hardware wallet company. We actually operate 3 lines of business. Late last year, we launched our enterprise solution called the Ledger Vault. So something that's more institutional grade, that's still hardware to hardware security solution. And then as well, we also have our IoT division, Internet of Things, where we help enterprises secure communication between different objects and machines.
Thank you, Ben.
Great. Hey everybody, Peter DeMeo from IBM. You're probably familiar with my colleagues in the IBM blockchain platform. That's not me. Or Stanley Young, who was just on stage a few times with WorldWire and central bank digital currency. That's not me either. I'm actually in the systems business, and we're responsible for building highly secure platforms for digital assets. And as you know, IBM has been at this for some time. The digital encryption standard, back in the 1970s, we invented it, as well as the first ATMs and the hardware security modules that went inside of those. So there's a long history with IBM in encryption and hardware, and I'm in the hardware business, and we are here today to talk about the kinds of things that we can do to help you make better choices in ways to protect your private keys.
Thank you, Peter.
Hi, I'm Chen. Previously, I worked on the first Android phones, first at HTC in 2000. We launched the first Android phone in 2008. I left and joined a venture fund called Horizons 2014 and 18. We had invested in companies like Blockstream and Digital Currency Group and Bakkt, and that's how I really got my education and understanding of the blockchain space. And then I went back to HTC 2018 to build the HTC Exodus. And very much like in the spirit of Phil Zimmerman, we were really about giving people the tools of cryptography to protect their private data, their digital property, of course, and right now, most importantly, your private keys. We are a blockchain phone that empowers you as a user to own your private keys. We're just taking that same architecture that allows you to own your Bitcoin digital assets, to own your digital identities, your digital property, and your data.
Thank you, Phil. The team at The Block actually tried to do a Exodus unboxing, but unfortunately, we couldn't get quite inside to show the guts. So we'll try it again. We'll try it again soon. What I'd love for you to do is explain to us, what are keys? What's a public key, a private key? I don't think everybody in the audience is familiar with this notion of keys.
Yeah, I'll start out. I think the year is 1976. I think cryptographers call the years before 1976 like the dark ages of cryptography. And so what happened in 1976 was this invention of public key cryptography, right? Like we all know that when you have your Bitcoin, there's a public address and then there's a private key. But the fundamental invention there, was, say me and Peter want to exchange some secrets, we can exchange a secret without having to know each other's keys. And somebody in the middle, right, trying to sort of eavesdrop this message, also can't access this message. So that's when public key cryptography was invented, and this notion of a private key and a public address started.
When I think about a private key, I often, actually private public key, I use an analogy of with email. So my email address could be like my public key. I can hand that out to everybody, no problem. but I wouldn't necessarily want to be handing out the password to my email account, right? And that's more like a private key, okay? You know, when I think about, traditionally when we think about keys, we think about using a key to lock something up, like an asset, right? But, you know, in cryptocurrencies and digital assets, we think of the key as the asset, you know, and it becomes very much an existential risk if, in fact, you lose the key, you know, to the wallet, because all of the funds could be lost, or if someone has that key, could be taken, right? So it's really important to have control over your key. And one of the first things I think we can talk about with respect to key management is key generation. You know, when you look, a key comes from a random number. It's derived from a random number, and not all random numbers, you know, are equal. Okay. There's this concept of entropy, where, you know, if you make a lot of like movements on your PC, you know, noise of a fan, mouse movements, or what have you, you know, it creates sort of this random number. And ironically, doing that doesn't really produce a very random number. It's called low entropy. And low entropy random numbers will result in keys that potentially could be compromised. So what we like to recommend is coming up with high entropy random numbers. And for that, you kind of need dedicated hardware that has a true random number generator that will give you completely unique set of keys every single time. And so when you're thinking about entropy, you always think high entropy. If I have high entropy, I have a secure key. That's what I want to create for my private key that I'm going to use to sign transactions.
Great. To dive a little bit deeper, you know, as we think about hardware wallets, HSM, you know, do the fundamentals of key management differ between the different, you know, those different ways of storing our cryptocurrency?
Yeah, I mean, I would categorize it. I think Peter has more fine categorization, which on a high level, I categorize in three, like just cold storage, hot storage, and I just call this new, like kind of like a new hardware HSM breed, right? I think what you did was clearly hot storage. You use a centralized server or exchange where, you know, I think 90% of the people still hold their keys.
Now, do I own my keys in that scenario, whether
No,
it be Binance or Coinbase?
That's the fundamental, right? If you don't own your keys, you do not own your Bitcoin, as Andreas would repeatedly say, right?
It's true.
And so
My team told me that over and over and over again.
Yeah.
I just didn't trust myself, and
Yeah.
you know, we'll get to the UX
But then
issue later.
the advantage of that is it's very usable. You can transaction and, you know, it's great. So it's always this balance between security and usability, right? And on the other extreme, like cold storage is, you know, basically you writing down your keys on a piece of paper, right? It's never online, and you store it, you know, in some vault or, you know, a bank, right? And then I think the third is this new kind of balance between usability and security. Maybe Peter, you can talk more about the finer distinctions within that HSMs.
Well, I think, you know, and I'll take your point. So there's maybe 3 or 4 different ways to store a key, right? You can store it on paper, as you were talking about. But others will actually take a key and they'll shard it up, and then they'll push that out into the blockchain, okay? And then they'll reconstitute that key when it comes time to sign a transaction. You can do the same thing with different public clouds and their cloud HSMs. Or you could store your keys into a hard wallet, like a USB type of HSM, or an actual, you know, dedicated, you know, enterprise class HSM. Or you could store your keys in, as the gentleman from Cordo in the last panel was talking about, protected memory. So Intel software guard extensions, for example, is an example of a trusted execution environment that's like protected memory, and you could store, you know, your keys in that as well. So there's trade-offs between all of these different things. I mean, if you're going to shard up your key and, you know, blast it out to the, you know, to the different public clouds, or you're going to onto a blockchain, you always have to think about, well, when I'm going to reconstitute that key, okay, the protocol that I'm using to do that, you know, has that been, you know, is that secure?
To be clear, that's an enterprise example.
Yeah,
correct?
I mean, but it's any kind of key sharding, you know, bringing it all together kind of thing, right? If you have to reconstitute the key to do a transaction, if the protocol that you're using to do that has been somewhat, you know, compromised, then, you know, you're compromised. Or if, for example, if the platform that you're using to do that on has been compromised, then you're also going to get compromised. And that kind of leads us to different, solutions like, multi-party computation as an approach to kind of, everybody has a piece of a key, right? And then mathematically, you can bring them together without actually physically bringing the keys together to do a signature.
Absolutely. So we talked about, some different approaches to storing keys. And I, being the genius that I am, need to actually read them off the page. Kidding. One is paper. Literally, this is when I was using a Ledger Nano, and I've graduated to a more secure solution. I was putting paper around, and I have a 16-month-old, and he found the paper, and we couldn't find the paper for about 3 days, and that made me nervous. So I changed methods. But the others are basic HSM and MPC, blockchain-based sharding, cloud HSM sharding and reconstitution, and then protected memory. Protected memory is one that we haven't touched upon in the discussion to date, and a few others, including FIPS 140-2, which I know you wanted to talk about. But would love for you to jump in.
Yeah, maybe just to add a little bit, just kind of talk about the pros and cons. I think some of the more popular, I think from an individual perspective, retail paper-based key management is still quite common. Mm-hmm. Now, I think it's quite obvious with paper-based at the end, ink fades, paper deteriorates. So that's one of the constraints on a paper-based side. But on the flip side, at the same time, you could argue that the paper is completely offline. Phil mentioned earlier about cold storage, so this is a form of cold storage. It's immune to malware, and if you need to replicate your paper, you just kind of photocopy, you can easily copy it.
So I think people, and I certainly did, I made a sort of cardinal sin, but I didn't trust myself not to lose the paper, and I actually scanned it and literally put it into my email. Again, we're past this, but I think there is a significant body of people who do things like that.
Yeah, and then if you kind of like fast forward, and I think when you look more on the enterprise side, then you have, as Peter mentioned, multi-party computation, or you have some form of multi-sig combined with HSMs. And I wouldn't say like one's better than the other. It's kind of the whole Betamax VHS kind of debate. With multi-party computation, it is software-based, so it's really a arithmetic computation where you break up the keys so that no one single party has the full secret. Now, on the HSM side, the interesting thing about HSMs is at the end of the day, HSMs, the storage space is very limited. So what you want to hold inside is really, the most important secret, which are your private keys. Now, at the same time, I think one of the constraints with just a very basic HSM is that it doesn't really prevent misuse of the keys. It really more helps you protect the keys from being extracted from the device at the end of the day. So today, like what you see is, maybe some form of multi-authorization, single sig that is, communicating with the HSM. So at the end, I think the solution is not one or the other, but it's really a combination of the few.
Yeah.
Excellent.
And I think a lot of vendors make a lot of claims. So then, how do you know, what to believe, right? And that's kind of gets into there is some standards out there that you can refer to. The Federal Information Processing Standard 140-2, to throw out a big name, acronym for everybody. But they actually, force all of the vendors to kind of go through this process, and it takes like a year. You guys are going through it. We've gone through it at IBM. And they have just so you know, there's like 4 different levels of this thing. There's, one essentially is a crypto card, right? Level 2 is I'm going to take that crypto card and I'm going to put an enclosure around it, and I'm going to put tamper evident sealing. So that means that, by the way, if I manage to do a cryogenic attack on it, and I get, maybe some probing, I might extract the keys. Well, that sealing will let me know that after the fact I've lost the keys.
To be
right?
clear, is this for both enterprise and consumer use cases?
The consumer side really falls on the FIPS 1 level 2 area.
The level 1, level 2.
Yeah,
and then you
3
get
and 4 and so forth. But it's really just different degrees. Like, do I have a, it's like the 3 little pigs. Do I have a straw house? Do I have a wooden house? Or do I have a brick house kind of thing, right?
Yep.
But so, kind of getting back to the four different levels real quick, so if you're like at a bank and someone takes the key, you can reverse the transaction, right? But in blockchain and crypto, can you do that? No, you can't, right? I mean, if someone gets the key, that's it, it's done. There's no coming back, right? So you really have to think about, do I have a technology that will allow me or allow someone else to actually get the keys? So we move sort of into the level 3 arena where the covers and the doors of this enclosed hardware security module is protected, okay? And in some cases, like in the Ledger case, they go beyond level 3 and it's what we call 3+, and they take a response to that, and really kind of gets into level 4, which is the sort of the highest level. And there you have a 360-degree like envelope all around the HSM. And at any point that's violated with any kind of attack, whether that's a chemical attack, voltage attack, radiation attack, probing, drilling, anything you can think of, right? That will cause the immediate destruction of the keys. Okay, so zeroed out, and in our case with IBM, it's 100 nanoseconds, and that key is, boom, gone. Okay? So under no circumstances can an attacker get the key. The attacker might trigger the destruction of the key, and that's a whole separate matter, right? But they will not get it, right? And you have the level 3+ and the level 4s that basically have this active tamper reaction, if you like.
So Ben, can you talk to us a little bit about security being more than just technology, right? I mean, there's a whole operational process behind it and a number of other considerations. We've talked mainly about the technology. What else is at play here?
Yeah, sure. And just to add quickly to Peter's comments around kind of the certification, I think the other thing we got to think about is like practical adoption. And as we think about banks or traditional financial institutions, hardware security modules have been used for decades. So that level of security and certification is something that is expected in the marketplace. And as Peter mentioned, at the end, they're tamper-proof. So worst case is, at the end of the day, your HSM gets tilted or somehow someone tries to extract secrets from it, it gets wiped out. You might get a service disruption, but you're not going to really have your funds stolen. Now, I think the other aspect, moving away from the technology, is really the operational aspect and people aspect. And at Ledger, what was really interesting is we started our business from building out hardware wallets, more or less you could say for retail customers. And what happened was in 2017, early 2017, we started getting some very sizable orders for the Nano S's from big hedge funds, from exchanges, and we started scratching our heads and we're saying, what's going on? And what we realized was people were starting to use the Nano S for the cold storage solution. And the technology itself is phenomenal, but the problem is you don't have governance. Today, if I hold my own Bitcoin, I'm not gonna hold a gun to my head and try to steal my own private keys. But today, if I'm a hedge fund manager and I'm holding onto the private keys and I have 500 million in funds and Hawaii looks quite nice, I could just walk away with it. So this is where the governance layer and I think the people layer that is really kind of underestimated. So what we've seen over the last, I'd say 18, 24 months is a big shift thinking about, segregation of duties. How do you enforce governance? How do you prevent malicious insiders from, even creating back doors within your infrastructure? So
we had an issue of this recently, didn't we?
Yeah. Just a couple earlier this week, we heard of situations where malicious insiders have been able to steal funds. So these are all things that I think are really important that we think about beyond just the technology and security side.
Well, the other interesting kind of holistic kind of point of view in terms of security is like our position, of course, is we want to empower each individual to have responsibility of their own private keys, right? And the difference in security is sort of a decentralized way of people holding their keys and then a centralized one where one hack you can get millions of keys versus one hack, one key, right? You have to maybe physically rob me to get my phone or my ledger, but you get one key versus kind of architecturally sort of a centralized server with millions of people's keys. So it's security in that perspective as well.
Interesting. Phil, would love to, there's a lot going on right now. All of a sudden, frankly, that in 2019 on the consumer side. And so I would love for you to talk a little bit about consumer key management and really what's been updated, what's changing, and how HTC, how Samsung and others are fundamentally approaching this in a secure way as likely tens of millions of folks over the next 12, 18 months are going to have cryptocurrency wallets on their devices.
Yeah, I think we play an interesting role in this, of course, the consumer space. Because at the end of the day, for this whole blockchain industry or decentralized internet or just Web 3.0 to really take off, I mean, I think we would all agree that it comes down to people owning their private keys or some key management solution that's easy for consumers to use, right? And then, as Peter and Ben were keep stressing, like the importance of this private keys, right? The private key is the asset.
And it's very different, by the way, than how, for example, an American consumer understands it. Like if you purchase cryptocurrency through Robinhood, I mean, you own nothing, right?
That's right.
Other than a couple, digits on your device.
Yes.
So you guys take a very obviously different approach.
Yeah, and then of course, then, securing the device becomes very important. And then often, of course, the question then becomes, what happens when you lose your phone, or what happens when you lose your ledger? And so we've built this thing called social key recovery. So basically, when you get your phone, if you opt into the service, we use a Shamir secret sharing. We'll split your keys into 5 parts, and you share these 5 parts to your friends and family. All they have to do is download an app. They keep 1 in the 5, and so when you lose your phone, you can reconstitute your key and recover your key by 3 out of the 5. So again, it's spreading out your risk. There's not one point of failure, but kind of decentralizing the risk of losing your phone and losing your key to, in this case, your friends and family, which is a human problem, right? It's not just a technology problem anymore.
Yeah.
But I think just in terms of how we approach the consumer private key, I think we're fundamentally different because we're working hard to give this tool to the consumer, right? And that also means when you lose your phone, you can't call HTC and have us recover your keys, right? That's the fundamental premise. You own your keys. We do not own your keys, And
How is the legal package that you put into the device box? Is it pages and pages of legalese?
No, I think so. That's the key. We're not holding custody of your keys, right? And we're also not a mobile device that's selling to you to get into the custody business, right?
And so you train your teams, out in the store to explain exactly, the function to that consumer who's new to this market.
And that's the fundamental premise. I think that's how we kind of differentiate us. And I think the reason why I went back to HTC to build this is because HTC sits in this interesting position, right? It's not a giant company where the main business model is to own the customer and, of course, own their private keys or hold custody of the private keys. But it's also not a small company where it doesn't have any credibility in building, respectable devices. And so it kind of sits in this interesting space, and we know where we fit in the ecosystem. We're not launching our own token. We're not, promoting a different blockchain, right? We are here to protect your private keys, and we have key recovery mechanisms. We want to protect data privacy. And then we can do more too, and we will maybe talk about this later. We have a trusted execution environment on the mobile side for you to run trusted code and things of that nature.
Yeah. Awesome.
And so that's the fascinating future of kind of decentralized applications on
I
the
appreciate
end
it.
consumer device.
So moving from consumer to enterprise, and I think we have 2 very different representatives between the 2 of you who are actually coming closer. In our prep calls, it really felt like that. But so I'd love to hear an answer from both of you. What are the key technical and operational issues that enterprises grapple with when solving key management solutions? What are the top 2 or 3 considerations? These are when they're looking to build a significant business with large enterprise clients.
Sure. So, just maybe piggybacking off the topic around custody, I think when it comes to crypto, key management is very different, because if you think about an asset class like gold, today I give bricks of gold to a custodian, they hold the whole brick of gold. But today, as we've been talking already, the key can actually be sharded, it can be broken up. So in some ways, each one of us here can actually hold one of the secrets. So it's almost like your brick of gold is split amongst 3 people. So one of the fundamental problems today is actually, well, who's really the custodian? So this asset class has kind of created the whole idea of, you know, third-party custody, joint custody, self-custody, and I think that's one of the things to solve is what is the safest way? And
can you talk a little bit more about that? So joint custody, self-custody, does that have to do with governance? You know, what are some of the primitives of thinking about that?
Yeah, so one would be, yeah, on the governance, there's kind of segregation duties. Let's say today I'm a custodian and my client is the hedge fund, and they want to do a transfer of funds. So what could happen is on the hedge fund side, I could have 2 of the 3 authorizations, and on the custodian side, I have 1 of the authorizations, or all of the authorizations could sit with the custodian as well. So this is kind of the segregation of duties that we really need to figure out.
And do you make recommendations to the client, or you know, how does that sort of give and take, given it's so early in the cycle, go?
It really depends really on the client, because today if you talk to a very traditional client, from a legal perspective, as a custodian, your custodian should have full access to the movement of your funds. So should something go wrong, you make a claim against the custodian. So in some ways, the client itself, the hedge fund, for example, would not actually want to have any participation. But from a security standpoint, what if your custodian goes rogue and they decide, they have 3 malicious insiders and they decide to steal your funds? Then maybe having one of the secrets sitting back with the client side kind of keeps everyone you know, a little more honest. So there isn't really I would say like a highly recommended solution, but it's really being dictated by the market, and the market's trying to find what is the right balance right now at the moment.
Yep, makes sense. Phil?
Peter?
I'm sorry, Peter.
Thanks.
It's getting late here, you know, New York time.
Yeah,
Just
really,
kidding.
exactly.
Yeah,
No,
Peter.
I think a lot of the points that Ben makes, we see the same, right? So, you know, we have a sort of like a different approach to how we look after, let's say, take custody, for example. We have if you will, the HSM, but then we have a trusted execution environment that sort of sits on top of that. That really is a general purpose one. It's highly secure. Put anything in it, and it's automatically encrypted many layers. You don't have to think much about it, right? So that allows you to really focus in on what applications you want to build, and then how are you going to secure those applications. So if we get back to the company approvers at the hedge fund example, right, maybe you want to build a bespoke workflow around however they do business, which could be different than another hedge fund, right? So you could just maybe put some smart contracts together, and you can deploy that into this trusted execution environment, which, by the way, you know, also happens to have the wallets as well, instead of actually having the wallets inside of an HSM, because that avoids things like, well, if I have to do a wallet upgrade, if I have a blockchain fork, or you know, I want to swap out an elliptical curve, I can just simply take a Docker container and put it offline, do the change, and bring it back up again, and make it become if you will, a hot wallet at a moment's notice, and then put it back into cold storage immediately. This also allows you to have different control mechanisms. So you have administrators, you have operators that you have to worry about. You also have your potential evil developers, right? I mean, we heard of it last year. It was BitPay had a open source hack, and that went into the Copay wallet, and then people lost their Bitcoin out of Copay, right? Yeah. So you want to basically come up with a way to prevent your trusted developers, right, from deploying into the environment with a backdoor, okay, or malware. And so, you know, we've come up with ways to handle all of these different things. In our trusted execution environment, for example, we call it the secure service container. There's just a REST API. There's no command line. So if you're like a bad guy, there's nothing to type, you know. And this environment boots up from from encrypted storage by the hardware, so that you can store secrets in it. There's no human interference there either.
So tell us about the fun of things like, you know, chain splits and updates, you know, for chain improvements and maintenance, and you know, how do you plan ahead? Right. You know, do you take on the cost? Does the client take on the cost? How often, you know, does this become an issue?
Well, so we basically, just like you know, R3 was talking about before, we're just a platform provider. So our the people we work with, the custody solution developers, really are the ones who are responsible for operating the solution and dealing with those kinds of things. What we do is provide them the environment and the tools in which to do that quickly and safely, right? In addition to sort of like, basic technology looking after keys, you also have to have like audit logs. Every single touch you do to a private key, who's doing it, when did they do it, when was it recorded, all of those things, they also have to be protected. And where do you store those things, and who has access to those? And hey, you know what? We had a problem, let's say with our level 3 plus HSM, somebody tampered with it, it blew up, and we have to do a recovery someplace else, right? Well, we can do that, of course, but who's authorized to say that we're going to do that? What's the policy there? How is that decided? How do you authenticate those who say, yes, we're going to recover? How do you authenticate them? These are all kind of enterprise problems that are pretty sticky, that have to come with policies, and those policies themselves have to be vetted and protected along with the keys and everything else, right? So you have to have the right infrastructure to do all of that kind of stuff.
Interesting. So we actually have a few minutes left for the final fun question.
Okay.
And I'd love to ask it. So what does each of you think will be the most exciting development, enterprise or consumer, in key management in 2019? And do you think that development has an opportunity to change people's perception of the market, of the security of the asset class, and significantly impact price? So development, and then, hey, will it impact price?
So I hate to be the boring one, but I think regulation is going to actually be key, because there's a lot of great key management technology right now, but what's going to be key for new market entrants to come into this place to really kind of revive the whole crypto market is, I think regulation is what's next. So if you want someone like a BlackRock to enter in this space, or an MPS in Korea, a pension fund, to assign a percent of their assets into crypto, there needs to be clear regulation. And sort of my interaction with regulators is that's actually one of the things that they're trying to figure out, is what is the proper key management solution. And you've heard a lot of different types. Some people say absolute cold storage is a way of doing it. Some people say MPC. I've heard HSM as being a standard being adopted. So that to me is actually a very interesting catalyst, because I think the technology's there, but what's important is once that rules and regulations are in place, then you're going to see more market entrants come in.
Great, thanks, Peter.
Well, I totally agree with you, but I also think convenience is really big, right? So mainstream, like my mother and father, will they start paying for stuff in Bitcoin? Well, they need to understand, first of all, what the private key is and why they should look after it. They need to, make sure that's written down, and that is protected somehow. And then, the seed itself has got a password, and you've got end things you need to think about, right? Well, I can assure you they're not going to think or do that. They'll give me my credit card. I'll buy it on Amazon, right? So you're right. We do have a lot of technology that can address the problem. We're not there yet. And I think there's somewhat of coalescence to moving towards the mature things that actually work, and I think we'll see a lot of cloud-based solutions, by the way. Excellent. That will start to help with that. Just a little plug for IBM just recently released HyperProtect crypto services on the IBM cloud. That's very, very simple. It's a keep your own key type of thing.
Touches consumers and enterprise.
Yeah, anybody can use it, right? Yep. And it's using the same technology that I described earlier. So it's just go, store your keys, and build your app.
All right, Phil, time's up. Your quick answer.
Well, I'm just interested in your remittance. I'm interested in the borderless kind of application of Bitcoin.
Absolutely.
And especially sort of the global south, Argentina, Venezuela, Philippines, Indonesia, that, have this remittance or money that crosses borders.
And that does have to do with key management.
Yeah, both sides has a phone that they can easily manage their keys. Then you can do peer-to-peer transfers.
Incredible. Thank you so much, Gents. Appreciate it.
Thank you.
Thank you.
Cheers.